new players. Play Huff and Even More Puff only on FanDuel Casino.
Don't complain. Don't murmur. Don't talk negative. Average people talk normal. Average people use their time to whine and complain. Average people talk problems. The greats talk solutions. I'm taking ownership.
Hold me close till I get up. Time is barely on our side. I don't wanna waste what's left. The storms we chase are leading us, and love is all we'll ever trust. Yeah, no, I don't wanna waste what's left. And on we'll go, through the wastelands, through the highways, till my shadow turns to sun rays. And on we'll go, through the wastelands, through the highways, and on we'll go.
All right, here we go. Start from the, let's clear the EU chart, start all over. Daily time frame, overall bullish. We're in the retracement phase of a bullish trend. We're in between this current high, this previous high, this previous higher low. Looking on our 4-hour time frame. 4-hour time frame is indecision, right? We're in between these highs and these lows. So I already know I don't even have to do too much detail on this breakdown. Right? I already know I'm not trading inside this fucking wick saw price action. I need to see price either break above or below this 4-hour level for me to take a trade. That's very simple, right? I mean, if you have a 4-hour just something like this, I'd rather not even trade it. Look at GJ. Same thing with GJ, bro. It's in between these highs up here and these lows. I don't want to trade this inside this price section. I don't want to buy until we above it or sell until we below it. GJ, same. Anything with yen, I'm looking at all the yen pairs the same. Same thing with EJ. So you're putting everything with yen at the bottom, bro, actually. Same thing with UJ. This 4-hour looks disgusting. Or I want to take a buy until we're above it, or sell until we're below it. That's it. Let's look at gold. Looking at gold on a daily time frame, overall bearish in the bullish retracement. Let's look at our 4-hour time frame. Our 4-hour time frame is bullish. We just took out this lower high right over here. We were bullish on the 4-hour time frame. We are in this tight, this big ass range though. So go to 1-hour time frame. 1-hour time frame is bullish as well. We can see a pullback into this previous high, or we could take some buys. We already had a breakout with this being here. Now we just need a pullback retest for continuation. I like this setup. We can add this to the top of our watch list. I really like this gold play potentially here. 4-hour bullish, taking out this lower high. 1-hour bullish. Then we can look to target the top of this range up here. And if we don't get the buy here, we can get another buy up here. As far as sales, 4-hour time frame, we can look take some sales below here. So 4-hour sales below here. Look to target these lows down here. Or these lows down here. Let's go. GU. This will fucking go today, bro. Everything else looks fucking trash. I want to treat none of this shit, bro. We're gonna focus on gold only today. Excuse me, damn. So far on our 5 minute time frame, our goal did tick this low. Now waiting for price to go back into this area. Thanks for the likes, demo. It was good, bro. Let's make this a YouTube video, not YouTube video, a YouTube short. Pause the music real quick. Oh fuck! I'm 100% gonna get copyright strike for this video. Thanks for the YouTube live, fucking bitch. I didn't even know that was Marshmallow Man playing, bro. 100% is getting copyright strike. Let's go. All right, I went for these gold cells. Fuck, I already fucked up. I'm not even waiting for gold cells. 3, 2. I went for these gold buys here. Looking on a 4-hour time frame, overall aggressive bullish, making new highs. 1-hour time frame, making new highs as well. We already had a break with a 1-hour closure above this previous level of the resistance here, making a new support. I'm anticipating that price could pull back into this area with structure just giving me a break and retest kind of trade. So it's good that we already took out this low here to let me know that 5 minute time frame is going bearish. Now I just need to see this 5 minute create some lower low and lower high structure just like so. That way I can get an entry as the market structure shift after retesting this area. So that's the market plan. Let's see how this trade plays out.
It's your bag, sir.
What gave it away?
Oh, you the Geico Gecko! I filed a claim for my car with the Geico app. Only.
What's good, Em? Let me know what y'all trade. Y'all trade futures in the chat. Got some ICT traders in here. Oh, boy. I think all the ICT traders are on TikTok. I ain't lying. I can't find my 3, bro. Fuck. I don't know what I did with them bitches. How the fuck I lose a whole pair of shoes? Still pricing, but I do currencies. So you trade Forex. Nice. How long you been practicing? It's good, Melanin Queen. Welcome to the stream, bro. Let me know what you trade and how you trade. If you trade fair value gaps or supply and demand or support resistance or divergence, let me know. Just completed week 1. Oh, nice. So you fairly new. It's nice. What you think about trading so far, though? Being as though you're fairly new. I will have my face cam on chat, but I can't have my face cam on TikTok and YouTube at the same time. So my face cam only on YouTube, bro. It won't let me do TikTok and YouTube at the same time. It's calm, but there's a lot more I need to learn. Wow. I want to say what do you know so far? I want to low-key say learning a lot is probably the worst thing to do in trading. I wish I could unlearn some of the shit that I learned. No, I don't. I'm lying. But especially as a beginner, like a lot of stuff that you learn be really unnecessary. It's a lot of stuff that's unnecessary. Especially at one time. Wait, what you mean by that? I'm confused. What you agree with? What did I just say? Wait, my face kept still on the YouTube chat? Okay, man. I'm trying to learn a lot can be overwhelming. Yeah. Learning too much. I like to call it analysis paralysis. When you learn too much, you start to see too much and it clouds your judgment. Like you might see a bullish trend, but then you see a bearish fair value gap, or a bullish trend, then you see want to sell off of a resistance, like, or a bullish trend, you want to see a demand or supply level, then you start to see imbalances, DC, start to see divergence. Like when you learn too much and try to apply too much at the same time, it really clouds the judgment. Okay, I can help you. I can help you with this. You don't gotta pick my strategy, even though I think I have the simplest strategy. But pick one strategy that you're familiar with and use that strategy only. All other strategies, don't use it. Don't even try it. Unless the one you're using is just getting cooked. But you don't know if it's getting cooked or not until you put the reps in. So just because you may have a red week don't mean that strategy not working, right? Just because you may have a red day don't mean that strategy not working, right? You want to pick one strategy, put the reps in, give it like a month, 2 months to trading that same strategy over and over and over again. And as far as what time, do it during London session or New York session, either one. Anything other than that, trash. You may see the people coming on here trading during agent session. Most of the time, the people that's coming on here trading during agent session are not popping. Most of the time, I want to say 90% of the agent session traders are not proper. Right? Do not trade agent session. Agent session is complete hot garbage. So apply it, whatever strategy it is, during New York session or London session. I prefer London session because it's a little bit less volume than New York session, but at the same time, London session, it's still enough volume to actually produce moves, and I don't gotta worry about news when I'm trading USD pair, especially USD, and I don't gotta worry about FOMC, CPI, none of that stuff affecting my news. I hate trading news, so that's why I like to trade London session instead. I don't gotta worry about news. And right, I started 4 years ago, and that's where I messed up at, listening to too many people. Yeah, definitely. Same. I started about 4.5 years ago, and I definitely learned too much. So base XAA, you will want to buy. But when the bias is higher than the USD buy. Okay, I have no idea what the fuck that comment meant, E, but I'm just gonna agree with you, bro. Fuck it. Daily bias, I'm bullish for today. See on gold, yeah, I'm definitely bullish. I'm just waiting for a retest pullback. These blue arrows you see on my screen, those are areas I'm looking to trade at. Anything in between there is not. I'm not looking to take a trade. So I'm only looking to take a trade down here, take a trade down here, or take a trade here. Other than that, anything in between that, I'm not willing to execute. I'm waiting for the 4-hour equilibrium. What about you? On gold, I'm just waiting for a pullback into 3361 to take some buys. Trend continuation, break and retest the previous highs. Really simple. That's how I trade, bro. I keep my shit super simple. I don't need all the big fancy words, right? I just keep it simple as possible, bro. break and retest the previous highs and previous lows. In this case, this is my previous high and the overall bullish trend. We already got a break to wait for a retest. No, I normally trade fair value gaps. Any recommendations to make it better? I have no recommendation to make fair value gaps better because I don't trade fair value gaps at all. I know how to find fair value gaps, but I think fair value gaps is overcomplicated, to be honest. But if it's simple to you, then it's simple to you. But the reason why I don't trade fair value gaps is because there's too many fair value gaps on one chart. Reason being is I would look at it like, how do I know which fair value gap is going to hold, or how would I know which fair value gap to trade off of, right? So looking at it, you could say this is the fair value gap down here. All right, you could say this is the fair value gap down here. Guess what? This fair value gap never got tapped into. Okay. You can say this is a fair value gap. Let's find another one. Okay, this one got tapped into. Fair value gap right here. This one got touched. We got a fair value gap right here. Like, there's too many fair value gaps to trade off of. If there's too many levels to trade off of, or too much shit, how do you know which one to trade off of? It's just it's overcomplicated to me. Even though it may seem simple to other people, just that I see no point in trading it. So I use support and resistance. I think you meant to say supply and demand, but I use support and resistance, not really supply and demand. So support and resistance is just pivot points in price. So whenever you see a turning point in price, there's a valid level of support and resistance. So in this case, this is resistance because this was a turning point in price. Support because this was a turning point in price. Resistance, turning point in price. Support, turning point in price. Same thing, turning point in price. Resistance, turning point in price. Support. Any aggressive turning point in price is a valid level of support resistance. So I trade off of support resistance, and I trade off of the major levels of support resistance, meaning because each of them are turning points in price and they're all valid levels, I don't really want to trade off of the minor ones. I want to trade off of the higher time frame, not the high time frame, the stronger levels. And the stronger levels are previous highs and previous lows. So in this case, this is our previous high. I want to trade off of this area. And if price doesn't break and retest this area, if price comes up and break and retest this area, this would be our previous high. If price comes all the way up here, then I'll be looking to break and retest this area. So I just trade break and retest of previous highs. And as far as lows, this was a low down here. This is where 1 hour and a 4 hour go bearish at the same time below this low. I wait for those two time frames to be as an added confluence. Now I wait for break and retest of this area, meaning break and retest below this previous low. That's how simple my strategy is. I just trade break and retest of highs and lows, but higher time frame structure confluence. Are you always live this time? So I normally go live earlier than this. I normally go live at 1 a.m., but I woke up hella late today. I woke up at like 4:30. I normally go live at 1 a.m. though. I couldn't go to sleep last night. I literally laid down for 5 hours straight. I think I laid down at like 8 o'clock. Not 8 o'clock. I laid down at like 7:30, 6 o'clock, and I didn't actually go to sleep till about 11 o'clock. What time does London open up for you? 3 a.m. London opens at 3 a.m. for me, but I like to trade during pre-London. Well, I like to come on the chart during pre-London. So I'll come on the chart during like 1 a.m. Do you follow the trend line for entries? Nah, I don't use trend lines. I don't use trend lines because a trend line can get broken and this trend will still be bullish. So let me put that in perspective for you. If I have a trend line, I draw it from this push here. Price could easily just come down here, still be bullish and go higher. The reason why I still be bullish because we never took out this low. So people that's looking at the trend line break are like, okay, we may have some sells here, and now they're getting thought on the sells because it's not a trend reversal. It's just a pullback, and this pullback could be off of a fib level, meaning a 50% retracement or a 70% retracement of an overall bullish push. Stop out the buyers that's buying to stop out the sellers that's thinking it's a reversal and overall be a trend continuation. So that's why I don't like trend lines. I'd rather just wait for the overall to try to catch a reversal of a trend line, quote unquote. I'd rather just wait for the overall trend to switch. That's based off of previous highs and previous lows. So if the previous low gets taken out, then I know the trend is switching. I don't need the trend line to tell me when the trend is switching. even though the trend line will give you like an earlier entry on the reversal, right? But again, an earlier entry is also a riskier entry because the reversal didn't happen yet. So no, I don't use trend lines. Y'all got any pairs in the chat y'all want me to break down? I can break down a couple pairs for y'all. If y'all like what y'all watching for, like ES, NAS 100, well, I already did NAS 100, but ES, it could be anything, bro. Silver, whatever, crude oil, German 30. Let me know. Y'all want something? If I got something y'all want me to break down, let me know. I got y'all. Hey, Keys the Creator, thanks for the road, bro. Welcome to the stream. Appreciate the follows as well. Appreciate all the new follows, man. I'm a little late to the live. I'm probably gonna stay live for about another 15 more minutes, maybe. Then I'm in. So hopefully we can get a retest and actually get this trade in the next 15 minutes. I'm trying to learn. What do you know so far? I can put it in the right direction. I'm just trying to find my perfect. There's no such thing as a perfect pair. Sorry to break it to you, buddy. There's no such thing as a perfect pair. You're gonna have A+ setups on some players. Other pairs you're gonna have not setups, right? So a lot of people tell people to trade 1 to 2 pairs, right? It's cool. It could work for the scalpers, whatever the case is. I'm not really a scalper. I'm an intraday trader. I hold my trades for about 4 to 5 hours on average, right? So because I hold trades a little longer, I look for the move of the overall day, not just the move of that session, right? So the scalper's looking for the intersession volume to carry the trade. I'm looking for the move of the whole day, not really just what's going on right now. So with that being said, a lot of the scalpers say trade one thing, like just all you gotta do is trade NQ, all you gotta do is trade volume, all you gotta do is trade ES, all you gotta do is trade gold, all you gotta do is trade UJ or GJ, whatever. I don't focus on just one pair, right? As you can see here, I trade all of these pairs in this watch list, but I don't trade all of them every day. I focus on the quality of the pair and not just any given pair or just that one pair. So to be specific, like here, you see these pairs at the bottom of my watch list. These are stuff that I'm not looking to trade because this looks bad price action. This is overall consolidation. I don't want to trade this consolidation, so I don't trade it. I put it at the bottom of my watch list. Same thing with all of these pairs. Bottom of the watch list, consolidation. Currently in a consolidation. So because I'm not interested in those pairs, I just put them at the bottom. I focus on the quality of the trade. So my watch list may fluctuate, like you may see me rearrange these pairs because I'm only focusing on the high quality trade where it's actually trending and not any consolidation. That way I can catch the move of the day instead of trying to play around or play Russian roulette inside the overall range. So when it comes to finding a perfect pair, there's no perfect pair. I trade all of these pairs. None of them are perfect. If something looks bad or choppy like this to where it's not going to give me an entry inside this sideways price action, then instead I would just trade something that looks more clean. And for me, gold looks more clean to trade rather than trading what looks choppy. I see basically I can mark up a chart a little. I stopped for a year. I don't know where to start again. So do you understand like the word and terminology? Like, do you understand how to find you don't understand how to tell the difference between a bullish and a bearish market, things like that? And before you stop, or when you mark your chart up, what do you look for? What do you look for in terms of levels? Are you looking for fair value gaps as levels, or are you looking for support and resistance as levels? What are you looking for in terms of levels? Support resistance. Okay, that's nice. What's your win rate? I have about a 70% win rate. A little over 70%, like 72%. Support resistance. So that's nice. Support. I like support resistance. I take support resistance as well. So you know the basics, I'm assuming. So being so you know the basic, you understand support resistance, you don't have nothing to like, there's nowhere to go for you to learn. Right, you understand support resistance. I'm assuming to a degree. You got to refine what you already know. I need a refresher for sure. Any tips for identifying fake outs? Identifying fake outs, you wait for if that pull back and see a level doesn't have structure, then it's probably going to be a fake out. I'm gonna show you an example right here. So look at the example right here. I trade support resistance, right? So you have a break and a retest. Look at this retest right over here on this 1 hour time frame. If you go to a lower time frame, like a 5-minute time frame, and a retest doesn't have structure, it's probably a fake out. Now you might be saying this retest does have structure right here because you see a higher high, a higher low, and a higher high, right? You see this, you might say this does have structure, but no, the structure has to take out a high first. So because this is a bearish, because this is a bearish push, before you want to see the structure, before the structure, you want to see that the structure that's forming takes out a lower high first, let you know that the bearish time frame is going bullish, and then you wait for the bullish shift for continuation. So this was a fake out. And let me give you an example on what wouldn't be a fake out based off of here. So remember I said if the retest has structure. So as you can see here on gold, what I'm waiting for, we were bullish here, right? On our 5-minute chart, created a higher high, a higher low, a new higher high. This has structure because on this retest that is coming right now, it took out structure first, letting me know that this level could hold. Now I just need to see this structure form, and then I need to see it take out structure once again, go to where I want us to go and not opposite to me. And I can get a buy like this, stop loss below these lows, and then I can look to target the high. So to identify fake outs, just make sure as price approaching your area, it takes out structure first, and then use that re-break of structure for entry. That's what I like to do. If a pullback or retracement is too aggressive, it's probably going to be a fake out. If there is no structure, it's probably going to be a fake out. If it doesn't take out structure first, it's probably going to be a fake out. Hey Frizzy, thank for the sub. Welcome to the stream, Frizzy, in the YouTube chat. And can you explain structure? So structure is just previous highs and previous lows. So I got a YouTube video on structure and a short video on Instagram about structure, but structure is just based off a consecutive higher highs and higher lows. In this case, higher high, higher low, higher high. That's a bullish structure, and bearish structure will be lower low, lower high, lower low, like this. So breaking previous highs and lows will constitute a proper break of structure. Yes, but you really wouldn't be wanting to wait for a breakup structure. You want to wait for a market structure shift. A market structure shift is a shift in direction. So in order for something to shift in direction, it has to go across, it has to go past its center point. So if I'm just basic like logic, right? If I'm shifting to the right, I'm doing sideways, lateral, strafing to the right, and I want to go back to the left. In order for me to stop going right and go left, I have to cross my center of gravity or my center point of my body to shift from going right to left. Same thing with market structure, right? For market structure to shift and we're making new highs and higher lows, in order for price to stop going bullish to start to shift into bearish, it has to first cross its center point of gravity, or the start of that push that made it bullish or that created that high. So this started the push that created the high. In order for price to go from bullish to bearish, it has to first take out the start of that push, which will be this point here. And same thing here. If market is continuing down, in order for the market to shift from bearish to bullish, it has to first take out the start of the push that created that most recent low, which would be this area here. Now, if the market does this, it taking out this low is not it going bearish. This is still going bullish because this push down, then this push up did not take out a high first. In order for price to take out to have a market structure shift, that push has to break a high. It doesn't break a high. This is just internal structure of overall bullish trend. So internal structure just means we are creating lower lows and lower highs for a retracement inside the overall bullish trend. So this will not be a structure shift. This is just a deep retracement until price eventually takes out the high first, giving you a breakup structure, and then eventually comes down to take the low out that created that breakup structure. And now this is where you would have a structure shift, because this is the start of the push that makes a new high, and then that low gets taken out. So that's overall structure. Identifying the current highs and lows of that overall market and wait for those lows to get taken out or highs to get taken out. But that high or low that's get taken out, for it to be a market structure shift, has to first break a high first. If it doesn't break a high first, it's not a structure shift, it's just internal structure. So in this case, this is the price action I see. I see lower lows and lower highs here. Reason being is because this push down took out this low, right? Giving you a real chart example. Now we see higher highs and higher lows with this higher high, higher low, this higher high. Again, this push down took out this structure. And now what are we seeing here? Same kind of effect. And then if we can take this lower high eventually, then I could have some buy signals being overall bullish for the daily, my daily bias, because our 1 hour is already making clear higher highs and higher lows. My 4 hours already making clear higher highs and higher lows. And then my daily is overall making internal structure higher highs and higher lows. So I'm overall looking for bias. Is that what liquidity is? So yes, you can say that's liquidity. The reason why I don't really use the word liquidity too much is because people put too much emphasis on liquidity, but it's not really that important. Well, it's important that liquidity move price theoretically, right? But the reason why I'm saying it's not really that important is because a lot of people base their strategies off of draws of liquidity. When ideally, I'm not really trying to find liquidity. It's too much liquidity on the chart. There's liquidity everywhere. But because it's too much liquidity on the chart, how do you know which liquidity price is going to get drawn to? Because it creates that indecision or that indecisiveness to me in my head, I don't look for it. But ideally, you could say that's for liquidity because liquidity sits above and below previous highs and lows. That's the idea behind liquidity. But if you're taking trades based off of waiting for liquidity to be swept, what about the liquidity down here? Are waiting for this liquidity to be swept? Because there is orders down here that trigger this aggressive push, right? These are stops levels down here. Again, there's liquidity sitting below this low. There's liquidity sitting below these lows. So which liquidity are you waiting to get swept? So because there's liquidity everywhere, I don't trade based off liquidity. What are your thoughts on ICT concepts? If it's 100 different ways to trade. For the people that trade ICT and it works for them, it works for them. I think it's overcomplicated though. And there's too much contradictions. Or it's too much to look for to me. But is liquidity below these lows? Are you waiting for all this liquidity to get swept before you take a long? And what if these liquidities don't get swept? But you see, we have liquidity above here. If you wait for liquidity to get swept to take a buy, a sell, right? So you wait for price to take this liquidity, then take a sell. Again, this liquidity got swept, but you're losing this trade because this is a overall reversal and not a liquidity sweep. So that's why I think it's flawed. Look, rest of liquidity sits above and below previous highs and lows, but also below them same previous highs and lows and where you have full on trend reversals. So instead of looking at this as a liquidity sweep, I would say this is a reversal, meaning we're going from bearish to bullish. Again, same here. Instead of looking at this as a liquidity sweep, I would look at this, we're going from bearish to bullish. And instead of looking at this as a liquidity sweep, if price wants to take this low out, I would look at this like we're going from bullish to bearish. And if price fakes out the sellers that's selling below this low and then generate the liquidity and then continue higher, this is just means sellers are getting faked out and they're going higher. Like you can't avoid getting faked out. Everybody gets faked out. It's impossible to avoid getting faked out. It happens, but you could minimize the how often you get faked out by waiting for certain confirmations. But like here, if we get a break with no retest, then I won't be a part of the niggas that's getting faked out because I need the retest first. So I'm not the seller that's getting faked out here. The breakout sellers are getting faked out here. Things like that. But as far as liquidity, that's what I think. And the ICT concepts, are really fair value gaps and things of that nature. The reason why I don't trade it is because it's too many fair value gaps on the chart at any given moment. So we're gonna pull up a random chart. Let's pull up ES. All right, so pulling up ES, let's do a clear breakdown. Clear chart. I don't like this ES chart. Okay, there we go. Can I see top down analysis? Yeah, I got you after this. Looking at ES, and just use the 1 hour time frame for fair value gaps, right? There's fair value gaps everywhere. So let's find some. There's a fair value gap right here. This one got triggered. This was a good play, I guess. There is a fair value gap right here. This one didn't really hold up too well. There's a fair value gap right here. This one held up pretty well. There's a fair value gap right here. There's a fair value gap. There's a fair value gap right here. This one didn't hold up too well. Right? So this looks stupid as fuck. It's too many different fair value gaps and too many different ones to trade off of. So how do you know which one to trade off of? Do you do the one that's most recent to current price? Right, if I'm only looking at the ones that's most recent to current price on a 1 hour time frame, there's not really any up here that haven't been mitigated already or filled. So you'll be wanting to look for something that's different. Oh, a different one. Overall, it's bullish trend, so I wouldn't look for a bearish fair value gap. I'll be looking for a bullish fair value gap. And there is none right here. There is none right here. Well, this one was already mitigated, so there's none on this chart. Maybe this is a bad example. But again, I just think it's too many different fair value gaps on one single chart. And how do you know which one to trade off of? Stuff like that. So because it's that level of uncertainty or indecision for me personally, I don't see trading fair value gaps or the ICT concepts or the Wyckoff or anything like that important. That's me personally though. I'd rather trade off of something that's easier to identify instead of needing a 3 candlestick pattern or three candlestick to define my levels. I could just use turning point in price. Any turning point in price is a rejection area. So this is a turning point in price, easy to identify. This is a turning point in price, easy to identify. This is a turning point in price, easy to identify. This is a turning point in price, easy to identify. I don't really want to have to sit here and zoom in to look up, mark off the wick and then looking at this, like, okay, is this going to get retested? Or what about this fair value gap? Or maybe this fair value gap is not it. Maybe we should look at this one. Which one of these is going to hold up? Which one of these is going to fail? Which one should I actually trade off of? Right? That's too much. Or is fair value gap down here? Like this one got respected, but trying to pick and choose which one to trade off of, too much. Unnecessary work for me. I just use previous highs and lows. That's it. Keep it simple. I think simple is better. But can I see your top down analysis? I got you right now. So let's pick a random pair. A random pair that's not on this watch list, and I'll do a breakdown on it right now. Why do you mark those turning points? Which ones? These here? Or these here? Because if they're okay, there's major levels and minor levels. Major levels are strong levels, minor levels get broken. So you have major, not most of the time you have major levels. But the second option, I mean this one right here. Okay. There are major and minor levels. Minor levels get broken a lot easier than major levels, right? So if I'm looking to trade off of that level, and that level is too tight between that level and the next level, then I wouldn't want to trade off of it. So even though this is the turning point price, and I could actively mark this off as a level of support, because this support did hold as resistance if we could extend this left. But even if I wanted to sell below here, the range to trade before our next rejection area, which would be down here, is too tight. It's not a big enough range to trade, because I'll be waiting for candlestick closures below this area. I'll wait for a break and retest. And as you can see, there's only a 23 pip range. And this 23 pip range will be even smaller as price closes below the range. So it will really be like a 18 pip range, something like that, with a 1 hour closure. So this, because the range is too tight, I wouldn't really want to trade in this tight range. So I would rather trade in the bigger ranges, because this is a minor level. This is my overall level. And then as you can see, looking at our next rejection below this level, instead of going for a 20 pip range, I can trade in a 135 pip range, 113 pip range. See? So instead of looking to trade off this level, knowing that we have a level sitting right under it, I would just ignore it and focus on the high or the stronger level with the bigger range, because I trade range to range. So if we break and close back below this range where the 4 hour goes bearish, and I have this clean price action to fill, meaning we have imbalances right here. This was an aggressive push with no real retracement. This price is going to fill in this imbalance at some point in time. Possibly we could fill this imbalance in if the 4 hour goes bearish below this area, and then we have this range to trade in, so on and so forth. I could trade this range below this range I have another big range to trade in. So, and it go from 100 pips to about 100 and almost 200 pips, 190 pips, right? So instead of trading inside this tight range, I really want to catch the overall range. That way I don't get price could easily just come down here, create them eagle loads, and then go higher, right? I don't want to be in there. So instead of waiting for price to potentially reject the area, because I don't know if this area is going to hold or not, I'll just simply wait until it gets disrespected with the higher probability of trade being below this range. How long have you been trading, and what's your timeline to profitability? I've been trading for 4.5 years. The first 2 years I was unprofitable. The last 2.5 years I've been seeing consistent profits and withdrawals on a monthly basis. I average about 5% a month. I only had one bad month this whole year, and that was in April. Specifically referencing this year. And every trade I take across all of my accounts, I take them on live stream on YouTube or TikTok live. So if you want to go back and do a deep dive into my YouTube chat to see if I'm lying or not, based off of like all the trades out stuff, you can literally just go on YouTube, type in my name, Trade All of FX, and you go to lives, and then you will see every live stream I had for a very, very, very long time. I've been going live for a long time. So, and you can see the progression of my strategy, because the way I trade back in, which was a year ago, not the way I trade now, right? But this goes all the way back to 3 years ago, where I first started live trading, but I've been trading for longer than 3 years. Yeah, so I like to have clean price action inside the range I'm looking to trade. If the price action doesn't look clean, or the potential rejection area is too tight relatively to the next pivot point. So if we have a pivot point here, right, this level, but we didn't have another one here, this is too small of a range. I really wouldn't want to trade this. So instead, I'll just wait to trade this one instead. And this one also lines up with a 4-hour level. So even if you have a pivot point here, like a turning point in price, this turning point in price is not significant to the higher time frame. Like this is significant to the 1 hour time frame, right? You could have some sells below here, like a scalper, right? But like I said, I'm not in for the intersection volume. I'm looking for the overall move of the day. Even if price takes this low out right over here, on this 1 hour chart, if it takes this 1 hour low out, this is still above this the 4 hour will still be bullish, right? Price can come down here and still be bullish on the 4 hour time frame, because this is the push here. This is the starter of the push that made this new high, meaning breaking above this previous high. But 4 hour could still be bullish here and just continue higher. So selling here, you could be getting faked out here, not trading with the higher time frame bias, being overall bullish structure. As you can see, we make clear higher highs and higher lows. So even selling here still doesn't make too much sense, but this is still bullish. This is a low quality trade. Instead, I'll wait for the high quality trade, wait for our 4 hour to go bearish, and that doesn't happen until we take this low. It's like an added confluence. Instead of looking at this level where we could potentially get faked out here on the sells, I could simply wait for the 4 hour to go bearish alongside the 1 hour already being bearish, just by closing below this level instead, with overall being a bigger range to trade. Dude, I love your insights. This is like a gem in a sea of paywall gurus and mentors. Nah, no cap. I'm low-key trying to be the savior of TikTok, because I just started going on TikTok live like a week ago, maybe 2 weeks ago. But I've been live streaming on YouTube for quite a while now and putting out YouTube content. But I recently came across watching people live stream on TikTok. I'm like, bro, this niggas is just lying to these people. This is not the reality of trading, bro. They lying. And I thought that was funny. And it's not just like 1 or 2 people that I've seen doing that. Like 90% of the people I watch live trade on TikTok just be doing straight bullshit. Oh, not time to pick pair. I got you. Let's do AD CAD, a random pair. Oh wait, that's features. Let's do ADCHF. Matter of fact. Let's go Forex, ADCHF. Oh, on the random pair. So I like to start off on the daily time frame. Before I get into detail on the pair that I'm on I'm going to show you. I'm going to tell you what I look for first. So I look for higher time frame confluence to where I pick a directional bias. So I'm a directional bias trader. So I have whether I'm looking for bullish or bearish on that day. Once I determine my directional bias, I use my 1 hour time frame for levels. So wait, let me slow down. I look for directional bias first, and I do that by looking at the daily and the 4-hour structure. Whether daily 4-hour structure are bullish or bearish, if we're making new highs or new lows on the daily and 4-hour time frame and a 1-hour time frame as well. After I had that directional bias sense in my head, I go to the 1-hour time frame to find my levels, because I trade off of 1-hour levels. Once I have those 1-hour levels in head, okay, that this is my support, this is my resistance on the 1-hour time frame, and I go to the 5-minute time frame for persistent entries after price reaches those levels. So now let me get into an example. So from the daily time frame, I want to know if my daily is making new highs or new lows. So ideally here, I'm saying we're bearish because we overall had an aggressive drop in the retracement. Inside this retracement, we have internal structure. Here, printing higher highs and higher lows. When I'm actually marking my chart, I don't do this. I'm just doing this for teaching purposes. I don't have to do all this because like I'm doing it for so long, I can just mark them all my zones off. But just for teaching purposes, this is what I'm looking at. We see higher highs and higher lows here. We have a shift in structure here where the daily just decided to go bearish. Now you see we have clear lower lows and lower highs. So my daily time frame is bearish. So I know I'm looking for sales according to the daily time frame. Now I do the same thing on the 4-hour time frame. So I reset chart, look at the 4-hour structure. Now we get more relative to current price. You see we have clear lower lows and lower highs here. Boom, boom. Price eventually took out this lower high where we decided to go bullish. So our 4-hour time frame is, you guessed it, bullish, because we have a clear higher high, higher low, higher high. Even though this is a retracement, this retracement is not taking out a low first, so technically this is still bullish structure. This retracement didn't take out the low that created that bullish move. So this is still bullish structure. This is a deep retracement of an overall bullish trend. My daily time frame is bullish. So now you might be wondering, well, what do I do? Do I buy or do I sell? You have a daily bearish and 4 hours bullish. Being those two time frames are different, you will need the 1 hour to go the same way as the 4 hour. So I need my 1 hour to be bullish just like my 4 hour. If my 1 hour is not bullish just like my 4 hour, then I will simply wait for our 4 hour to pick a direction. So let's see. Look at the 1 hour time frame. What are we, bullish or bearish? Look at current price. We're bearish here. Reason why we're bearish is because we're creating higher highs and higher lows here. We eventually took out these lows down over here. We created this lower low, lower high, lower low, lower high, equal lows, right? Then we went back bullish at this area, and now we have higher high, higher low, higher high. Again, we went back bearish below this area. Now we have lower low, lower high for potential lower low. So our 1 hour is bearish. So if our 1 hour is bearish, our 4 hour is bullish, and our daily is bearish, I don't want to trade with a 4 hour being the indifference time frame, being as though our daily and our 1 hour is supporting each other, but our 4 hours not. If there's a gap in between time frames, I won't trade it until that 4 hour is in sync with both of the other time frames. But if I have the 4 hour and 1 hour in sync because they're right next to each other, meaning the 4 hour is right next to the 1 hour, then I'll trade it. But because the 4 hour is different in between the daily and the 1 hour, then I won't trade it. So as far as me trading it, I will simply just wait for the 4 hour to go alongside the 1 hour or the daily time frame, or I'll wait for the 1 hour time frame to go alongside the 4 hour time frame. So ideally, what my chart would look like is I will mark off my 1 hour levels. Let's clear all of this stuff the way I'm not looking at it no more. I would say, okay, looking at the 1 hour time frame, we're in between this current high. We just took out this previous higher low, or decided to go bearish, and now this is our current low. And now you can see this is how I found my ranges. You see we have an overall consolidation here. We have a clean range down here for clean candles to trade against. Then we have a clean range up here for clean candles to trade against. So all I did was just mark off my current high, mark off my previous high low, that shift structure, and then my current low. And that's how I got these ranges. After that, I would simply adjust this line because we have closures below this range. So if we had closures below this range and the price didn't continue, I would just simply adjust this and refine this area to looking at this low to be looking at this lows right over here. Now I have a level of support here and a level of resistance here. I'll just simply use my rectangle tool, draw it from the highest body to the lowest wick, and then change color, extend it left, extend it right. And now I have this overall being this whole range. This is whole turning point price. If I extend it left and you look left, guess what? You have more rejections in this area, more rejections in this area, more rejections in this area, more rejections in this area. Now this lets me know this is a valid level of support. And that's the same thing, resistance. I'll just mark off the highest wick to the lowest body, extend it left, and then look, you see rejections, 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 all off of this area. Rejections, rejections, rejections. So this, look, you know, this is a valid level of resistance. This is my current price section. Now ask myself, is this a range I want to trade in? This is overall consolidation, right? This range is hella choppy. There's no clear direction in this price action here. It's too rangy. If I move this over here, again, there's no clear direction in this price action. It's too choppy, too rangy. right? So I don't want to trade inside this range. I will either wait for a break above or break below this range. So I'll either say we can take some buys above here or sells below here. If we buy above here, our 4 hour time frame is still bullish above this area because we'll be making a new high in the 4 hour. Meaning at this time, if price breaks above this area, I'll have the 4 hour being bullish and the 1 hour being bullish. As far as sells below here, I really wouldn't want to take these sells. I will make this a dotted line, but these sells are counter trend to the overall 4 hour time frame already being bullish still. It will be counter trend to the 4 hour time frame. Pro trend is the 1 hour and daily, but because it's that difference, I would say this is a more riskier trade, a low quality trade. That doesn't mean I wouldn't be open to taking it. Instead, my high quality trade will be where the 4 hour shifts bearish at. I'll go to the 4 hour time frame and say, what is the most recent low that created that high? Most recent low that created this high on the 4 hour time frame right over here will be this low right over here. So I'll simply just wait for price to come down, take these lows out to take sales. And then you will see my chart look something like this, where I'm looking for buys above this area, sells below this area for risky sells. Risky sells, I will be scaled down risk. So instead of risking 1%, I'll risk 0.5%. Then some clean sells down here. And then we could look to fill in the rest of this range for a target. And this is a turning point in price. And then as far as buying above this area, we could look for up here as a target, meaning turning point in price. You have a target here as well, where you can look to manage risk at, because this is a mid level, something like that. And then this is how I do my charts. What's your biggest winning trade on gold? I don't even know what my biggest winning trade on gold is. I know my biggest profit day is in total, but I trade so many different pairs. I don't really focus on what's my biggest pair for that, my biggest trade for that pair. But I know what my biggest profit day is. So that's how I do my top down analysis. And so as far as my gold chart, I do the same thing on every single pair. So my daily time frame, our overall bearish, we inside the internal structure, right? The reason why we're bearish is because this push down took out this low. So I know my daily time frame bearish, and we never rebroke this high. This is just internal structure or overall bearish push. The daily is bearish. Look at our 4 hour time frame, we're bullish. Reason being because we went bearish as we took this low out right over here. We had some lower lows, lower highs forming here. Went back bullish above this area, created a higher high, a higher low, a new higher high. Our 4 hour time frame is bullish now. Looking at our 1 hour time frame, we're bullish here as well, creating higher highs and higher lows. See, we have higher high, higher low, higher high, higher low, higher high. Because I have a 4 hour and 1 hour time frame is bullish, I want to take buys ideally based off of this price action. We broke above these previous highs to the left hand side. So this is why I want to take buys. Now you say, draw my 1 hour levels up. This is my previous turning point price on the 1 hour time frame. Price previously broke the area. I just want to see price come back down and retest it. Broke trend continuation. If price doesn't come down and retest it for a trend continuation, and it just continues higher, I would just simply take it above this area and wait for this break and retest. If that doesn't happen and price fails to hold this level and continue down, I would look for sales. If my 4 hour shift bearish, where does that happen at? 4 hour takes this low. So this is what I wait for. Either a retest in this area that with confirmation that this level is holding, a retest in this area, a break above and a retest in this area to see that this level is holding. And if none of these levels hold and prices decide to continue dropping, we may take some sales down here. What confidence do you look for when it's approaching your levels? So I just use the same thing. When I tell you my strategy is so simple, I use the same thing on every single time frame, the same exact thing. I just need to see higher highs and higher lows, a break of that structure as price approach my overall level, and I need to see that break of that structure have some kind of structure like this, and then I would simply just use buy stops and sell stops as price comes. So I would have a buy stop at the break of this lower high for a buy. If we make a new low first, a lower high and a new low again, I would just turn my buy stop from this entry to this entry, just getting tighter and tighter and tighter, and until I eventually get triggered. If I don't get triggered and price continues down, that lets me know I'm just avoiding the fake out and I never get triggered, which is good. So looking at gold, and I do that on the 5-minute chart. So once price give me a breakout and I wait for price to return to my level, I go to the 5-minute chart to see how it returns to my level. My 5-minute chart may look something like this, where we were bullish, higher highs and higher lows. This is where the 5-minute go bearish. Even though it's going bearish here, I don't want to sell because I'm overall bullish on the day. So I don't want to look to take sales. I'm just using this bearish confluence. It lets me know that we're in the retracement phase. Looking at this 5-minute chart, I see lower low, lower high, lower low, lower high, lower low, potential lower high. I just need to see it continue down to this area, and I'll eventually set a buy stop at the break of this high. And confluence with overall being a bullish bias into being that this level will hold. And I have stop loss below the level, and I can look to target the top of the range, like this. If you look at my TikTok, I have like live trade videos or like before and after, or me charting in real time, and all of those TikTok videos you see, that's me live trading, like a trade breakdown that's under 60 seconds. I think that would be the title of the video, something like that. All of those videos are trades that I actually took on live. So any video you see on TikTok that of me live trading, I took all of those videos. I took all of those trades on live. So to give you an in real time description of how I trade, you can watch those TikTok shorts, or you can go on my YouTube channel, which is Traderholic FX, and go to videos, and I do live trade breakdowns as well on top down. So if you want to see a series of me doing top down analysis, just to keep seeing it as repetition, you can go to my pre-market analysis where I break down what I'm looking for before that week even opens to show everybody what I'm looking for. Either that, or you could go to where I watch a live trade breakdown video, or you can watch any other video like me trading price action, things like that. If you want a short form video, you could do my TikTok, or you can go on my YouTube shorts where I break down in real time me before and after me taking trades. So as you can see, this trade is actively running. This was in real time price action, and me explaining why I'm getting in and where I'm looking to target, things of that nature. And you can also see them here. You can also see them here. Trade breakdown under 60 seconds. This was like a little skit. My risk management plan, more trade breakdowns, another trade breakdown, pre-market analysis, describing what I think about candlesticks with a lot of trade in the background, all kinds of stuff. I used to do signals and stuff like that. So this is like, oh, I don't sell signals anymore. Me talking about bullish and bearish and how to decipher when it's switching, things of that nature. But I'm finna get off here. I'm finna go to the gym, and I'm wrapped up right over here. I appreciate all the new follows. I appreciate the gifts. I appreciate everybody talking about the stream. If you want to catch me on YouTube or TikTok, you can do so. If you want to join my Discord, I do have a free Discord community as well, where I am active in. I will pull it up right over here. You can find a Discord inside my YouTube bio, or under any of my YouTube videos. My Discord should be there. Inside my Discord, I go over, well, just a general chat where people decide to talk, whatever, send in trade ideas. I also send my trades what I'm waiting for before I go live as well. So for example, on the 17th, I wasn't live just yet, but I sent in a Discord that I'm waiting for. You see the title right here, waiting for this next 100 play 5-minute higher, 5-minute 1 hour higher time frame. This was the trade before I got in. This was my buy stop set, and then that trade ended up being a fucking banger. So I'm active in the Discord. I send my trades and shit like that all the time. If you want to post your own trade ideas and get my feedback get feedback from me, like, oh, Nate, what you think about this idea, or Traderholic, what you think about this? You couldn't do that in trade ideas section, introduction where you introduce yourself, things of that nature. All kind of stuff in my Discord. I also do trading psychology, so I'll post like psychology tips, like quotes and stuff like that to help you get better with psychology. And same thing with risk management. I haven't did any risk management ones yet, but I will start. If you want a detail in writing of how I trade in text, this will be here. Again, detail in writing instead of if I'm not there to tell you how I trade, or you don't want to watch YouTube video, you want to read it. This is how I do it. I determine my direction bias higher time frame. Start by analyzing structure on the 4-hour daily time frames and establish a clear direction bias, bullish or bearish, identify key levels, 1 hour, so on and so forth, right? All that will be inside of the free Discord community. And you can find a link to the Discord in my YouTube. But I'm gonna wrap it up here and end it. I am still looking for this gold play, but I'm about to go to the gym. If I get this play while I'm at the gym, I would simply just take it, to be honest. But this pullback is just deep enough for me. I want to see a triple pullback. I'm wrapping up here. Thanks for everybody talking about the stream. It's your boy Traderholic chatting about peace. Well, I'm putting up peace and shit. Like I got my face cam on for TikTok, my face cam only on for YouTube. I just forgot. But I'm out of here, chat.